segment is sponsored by JCN Financial and Tax Advisory Group. Welcome to Great Day Houston Plus. There are several factors that can lead to a successful retirement, but one of the most important and overlooked are your taxes. John Nealon is the CEO of JCN Financial and Tax Advisory Group, a Houston area firm that focuses on preparing people for a successful retirement. Hi, John.
How you doing?
All right, you are from a background of finances. Your dad was a CPA, but what really pushed you into this business and makes you so passionate about it is something that happened to your mother-in-law 20 years ago.
Well, yeah, she'd been widowed, I guess, probably 10 years at the time, and was having trouble with the money and not able to resolve it and kept asking me for advice. And of course, I didn't really know, but I went with her one day to see her person, and I was just dumbfounded in how she was treated. And I felt bad for not getting involved any sooner. And it was that day 20 years ago, I said, man, I wonder if there's other people like my mother-in-law, June. And I went into business doing just this.
Yeah, and a lot of us don't know any better because we don't understand the system. A lot of us think if I just have my 401k or my pension, I'm good. I don't have to do anything else. But you bring up that other aspect of taxes, which can really cost us.
Well, you know, if you pay $1 in taxes, you don't have to pay. That's a loss right there. But it's a preventable loss. And there's not enough attention paid to that. People that are saving today, their biggest amount of money is in a 401k or IRA. And that is the highest tax account in the land with penalties for not taking it out when you have to. And once you do take that out, you pay tax on it. You're not allowed to put it into a tax-free Roth. So it's really something you need to know more about other than just saving your money.
Yeah. And your dad taught you something on that perspective in the sense that he said there's a difference between a tax preparer and a tax planner.
Yeah, my dad was somewhat progressive in that he would tell me, he says, as an accountant, John, what we do, if I'm driving a car, I'm looking in the rearview mirror and I'm trying to gather every deduction possible to put on my client's return. But as a planner, you look out over the dashboard and create deductions for the accountant to take. Yeah, and that's what I do.
There are a lot of lessons we can learn from wealthy people, and one is they focus on what? The tax planning. Oh,
yeah, they sure do. It's the number one planning issue for most wealthy families. And you take a look at in this country today, if you've got $1 million in a retirement account, you're in the top 3% net worth in the country, but you're different. You're paying a higher tax rate than the wealthy, and yet other distribution rules and penalties they don't have. It doesn't have to be that way.
Yeah, well, we all have to pay taxes to some degree, but how do we lessen retirement tax liability? Give us an example of that.
Well, you do it, you start with a plan. I mean, you should not have a penny of your money invested without a plan for doing that. But this plan is going to show you a whole lot of data that's going to then tell you what you can or can't do to minimize your taxes. If you have a large IRA, I don't think I've ever sat down with somebody with a large IRA, say $1 million more, that couldn't do something to minimize those taxes.
Yeah, and when it comes to our income needs in retirement, a lot of us may underestimate it and it hits us by surprise. You're starting to go through it with your mother-in-law. I went through it with both of my parents. One of those things is just long-term care.
You know what long-term care really is about quality of life also. So I don't want to get away from that, but you need to have plan for these things so that if you do need long-term care or if you do want to do something special, you've got the money to do it. And tax planning is key because you can get dollars put into your pocket that you didn't take any additional risk to obtain.
Yeah, and dollars that will buy more.
Well, think about this. When does a $50,000 become a $65,000 car? When you buy that car out of retirement funds, because you got to take $50,000 out to buy the car and about another $15,000 to pay the taxes on the funds you just withdrew.
One of those things
that tax-free, yeah. You take out 50 to buy 50.
One of those things that people just overlook. John, thank you very much.
Take care.
All right, if you are looking to make sure you have a proper tax strategy for retirement, John has a great offer just for Great Day Houston viewers. The first 5 callers with a portfolio of $500,000 or more, he's offering a complimentary retirement plan. This will allow John and his team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps for a successful retirement. It's a game plan to get you where you need to be. The number to call is 832-345-9300. Again, that is 832-345-9300.